Good morning, all. I'd like to thank you all for joining this NWR Communications webinar with Ken Aitken from Metgasco. It's been a very busy few months for the company, Ken, since our last webinar, and the remainder of 2023 looks equally as exciting, with 2 fields in production hopefully by year end. Ken will run us through some slides for about 15 to 20 minutes to update us on recent events and the outlook for the rest of the year. And at the end, if you want to ask questions, we will have an opportunity for Q&A. Just enter those questions in the chat function on Zoom. So over to you, Ken.
Thanks very much, Aidan, and I'd like to welcome all shareholders to Metgasco's first webinar of 2023. And I'm very proud to say that since our last webinar in December 2022, we've moved from being an explorer to a gas producer. And as Aidan rightly said, it's 2023 shaping up to be a transformative year for the company, due to delivering not just one field, but another field called Odin in the next few months. Just remind shareholders just to go through the disclaimer slide and look at reserves and resource notes and glossary. So this is a key slide. It's basically the highlight slide, and also will form the agenda of the presentation today. As we said, we've got our first gas from Valley 1. It was delivered in February, and I'll summarize a little bit more of the status of the other Valley wells. I'll provide an overview of the Odin field project, which is going to be fast-tracked into production in Q3 this year. I'll give a bit of an overview of a reserve and resource position and point out...
Ken, just to jump in there, can you share those slides? Sorry, they're not appearing on the screen. I've just got a few messages.
Oh, right. Okay.
Should be shared. Are they there now?
Beautiful. Thank you, Victoria.
Yeah. Okay, yeah, we'll go through the resource and reserve, uncontracted reserve position. We'll just briefly talk about how the quality East Coast gas market to be selling our product into at the moment. It's a great market, and obviously buoys us for drilling further wells and producing more through our production hub. I'll just cover a little bit about how we've got a focused strategy for onshore Australian gas. People know who we are, management team and board, and the fact that we're fully funded for getting the Valley wells, Valley 2 and 3 online, and Odin short and long-term project as well. And we'll cover the various catalysts that we have going forward in the next 12 months. So this is a quick company snapshot. In March, one of the key things that we achieved early in the first quarter in March was to finalize a 5 million debt facility. And we did that with 2 of our long-term shareholders, Keybridge Capital and Glen. I'd like to thank them for the support in providing that debt facility. The debt terms that were secured were highly attractive in the market, and that puts us in a really good position going forward. We're now fully funded, as I said, for Valley and Odin field commercialization commitments going forward. The company strategy is to grow a profitable business at Valley and Odin, repay obviously the debt that we've just taken, and also the AGL prepayment debt, and then invest cash flow into field appraisal activities, while while reviewing other business development activities. So it's maximizing the gas production through our hub, making the most of the excellent gas market over East. At the moment, we are undervalued, and hopefully, when I take you through the story here, you'll realise that our current net reserves and resource position is certainly deserves a higher market capitalisation where we currently sit. But just going on to the East Coast gas market, the graph in front of you just shows the supply-demand gap. It's about 30 petajoules in 2023, and as the fields, particularly the offshore Gippsland fields, drop off in production, and there was a bit of a hiatus of activities which we took advantage of by drilling through the pandemic years. We've now got 4 wells ready to. 3 wells are 4 in total, 3 from Valley and 1 in Odin in the next few months to produce into this market, into the domestic gas market. The Odin gas marketing was unaffected by the government intervention and that occurred back in December. The small cap producers are exempt, so we recently secured a really good gas sales agreement with Engie, supplying gas for Odin into Pelican Point Power in South Australia. So really, MEL, the message here is that Metgasco can deliver its uncontracted reserves and resources into this excellent market, and that drives us to keep that production hub full. We've got 20 million standard cubic feet a day of raw gas potential to go through there, and we want to develop that gas in the short term. This slide just shows you over the pandemic years with the Ukraine war in Europe, how the global LNG supply side issues tightened the domestic gas market and has really improved the domestic gas price position. So this slide shows 2 donut graphs of uncontracted gas. The bottom one shows in Valley the 85 petajoules remaining of uncontracted. We have contracted through to December 2026 up to 16 petajoules of gas at a multi-tranche price, which is CPI index. We did take a $15 million gas prepayment, which is about 3.75 million net to Metgasco. But the key point here was the signing in mid-May, the recent news, excellent news of signing a GSA with Engie to go to Pelican Point Power Station. And that basically takes all of Odin gas production up to December 2024. And just more recently, we had ACCC approval in the last few weeks for joint marketing of gas from Odin post-2024. And we are just kicking off that work to sell you can see 39.7, a lot of that contingent resource, which will hopefully become converted to reserve shortly, will be sold into the post-2025 market, which still looks very, very good for the joint venture. So this just shows you the Valley and Odin creation of value over the last 4 years. We've basically taken a field, drilled 4 out of 4 successful wells, 3 in Valley, 1 in Odin, and commercialized it in such a short space of time. In the Valley field, we had 100% ownership, and we farmed down to 2 Cooper Basin gas experts, and obviously Vintage is the operator, doing a great job taking it through Valley to first gas on the 21st of February. The key here is to utilize the hub facilities for further gas discoveries into the future. We're also looking at some oil exploration in ATP 2021. The other thing to say is that we are looking at other business development opportunities to replicate the success. So this is a model where you get 100% ownership through gazettal or buying in, and then you take that to a production within 3 or 4 years. And we hope to do this in other opportunities. What we have seen more recently is that the door has opened for us being now a revenue generator to get into data rooms for other assets, and we're currently looking at some of those. Yeah, so the key with the production hub model is that the spare capacity allows us to increase production, produce these reserves and resources, and then effectively any exploration discoveries. And you can see the Kinta-1 well in the map on the right-hand side. That was the only well drilled in the block. In the future, we plan to shoot some seismic and then drill a Kinta well, both in a gas and oil, potentially one well covering both. So it's really a low tie-in cost of any new discoveries. So if you discover a smaller field, then the chance of it being commercial is much higher, producing into this production hub. So overall, we have, you can see the reserves and resources in Valley. We've one well online, Valley 1. It came online the 21st of February. Valley 1 was producing about 3.4 million standard cubic feet a day of raw gas, and was meeting expectations. The field has just had a short, about a 14-16 day shutdown for planned maintenance, and that interrupted our plans to bring on Valley 2 and Valley 3. Valley 3 did start production in the end of March at about 1.3 million standard cubic feet a day, and a short shutdown caused that to not restart. So what we need to do is get the equipment, both tank equipment and wireline equipment, which has been hard to get hold of in the basin, bring that in, and we're doing that as we speak. And we're going to restart production on Valley 3 and start up production on Valley 2. As I said earlier, 85% of the field reserves are uncontracted. So we're pretty confident that in the next month or so, we'll bring in the Valley 2 and Valley 3 wells and bring them up to production. Our strategy here is appraisal through production, and so we are trying to understand what each of the zones and the reservoirs can produce before making production forecast estimates. You can see here on the right-hand side the geology and the Pachawara Talachi, and you can see the proximity of the Odin-1 well from the 3 Valley wells. So it's testing each of these zones, understanding what they can produce, and then design the development of both Valley and, of course, Odin. This slide is showing you the Odin long-term connection to the Valley, short and long-term connection to the Valley infrastructure. Odin was drilled in 2021 and found a net gas pay of about 172 meters of net gas pay. It is the best conventional reservoir of the 4 wells drilled to date in the Valley Odin hub. It tested at 6.5 million standard cubic feet a day from the Epsilon and Talachi, and we will add in the future some perforations into the Pachawara, and we expect that to flow conventionally as well. So by far of the best producer of all of the 4 wells that we have in the area. Well was completed in 2022 and is ready to produce. So back in December or October, November last year, we decided to fast track the production. and that involves, and it's already been laid, a 1.4 kilometre line. You can see that in the map where it shows Odin accelerated connection pointing to that pipeline. So the only thing we need to do now is, and we've got all this equipment in country, is to install the rental equipment at each side of that pipeline that hooks into the midline riser of the valley pipeline. The long-term Odin connection takes the gas from Odin back to the valley field where we can utilize the infrastructure, and that'll occur after we bring in Odin 1, which is planned for Q3 this year. So that'll be a big boost to the overall field revenue, and we look forward to that occurring. And again, to reiterate, Metgasco's debt facility that we secured in March has allowed us to be fully funded for the short and long-term tie-in of Odin, and also for the Valley 2 and Valley 3 restart of gas production. So over the next 12 months or so, there's a significant amount of catalysts to look forward to as shareholders. We're going to be completing in the short term the appraisal zonal testing of the Valley wells, get Valley 2 and 3 to establish production. We're going to install the remaining rental equipment to get Odin up online, and then we'll start marketing the Odin gas. In fact, we're starting that since right now, and Odin gas from January 2025, because the Odin contract goes through December 24. We are looking at the planning and timing of future appraisal wells to maximize production through the Valley Odin hub. So in conclusion, Metgasco is now graduated from being an explorer to a producer. Not many small companies can deliver that, particularly in the time frame that we've achieved it, and we're certainly proud of becoming a revenue generator. Odin is fully funded and is on track to deliver in Q3. We have a focused onshore gas strategy and are reviewing other opportunities to grow the business further. So I'd like to thank all shareholders for listening, and I'll hand back to Aidan for the Q&A.
Thank you, Ken. Thanks for that run through. Fantastic story. Yeah, so just a reminder, if you have a question, do enter it in the chat box on Zoom. We do have a few, naturally enough, a number of them from the emails yesterday on chat, focusing on Valley 2 and 3, Ken. You know, you touched on that in the presentation, but you know, what still needs to be done there, and what sort of time frame should investors expect now for those 2 additional wells to come online?
Yeah, in our quarterly report back in April, we outlined the Valley 2, where there was some frac fluid crossflow into the Talachi zone, and that occurred. So we hadn't fully produced all the frac fluid back in August last year when we fracked and completed these wells, and we knew that there was some element of flow back required. We did have some crossflow into the Talachi. We've been dogged by availability of equipment. We're one of the smaller producers in the region, so we've had the equipment sporadically, and more recently, in the last 2 weeks, we've had a planned shutdown as well. So the good news is that the equipment to re-establish production on Valley 3, which did produce for a number of days back in March, early April, we'll have that. The equipment is arriving shortly, and over the next 2 to 3 weeks, we expect Valley 3 to at least produce as much as it was back in March, April, and Valley 2, we have unloaded quite a lot of the frac fluid, and we're on Valley 2 focusing in on the Pachawara formation. So in answer to your question, Aidan, we're confident that in the next few weeks we'll be increasing production through Valley.
Thanks, Ken. The questions are coming through fast now. So you mentioned Odin, obviously strong gas sales agreement announcement, and the ACCC ruling was another positive. How does Odin, as much detail as you can provide from a cash flow perspective, impact the company versus Valley? Because obviously there's a prepayment in there and the piggybacking off the hub. So if you can give, sort of some sort of color around Odin, the impact on cash flow versus Valley.
Yeah, so Odin's hugely important from a cash flow perspective. It did test at 6.5 million standard cubic feet a day. It'll produce a little bit less going through as we tie it into the pipeline, but it's still going to be a very strong producer. And if you add in the fact that we've got a very attractive gas price, I mentioned earlier in the presentation that we weren't affected by the gas price caps. That was the government intervention back last year could have threatened, but it didn't. So we've got a very Odin 1 is going to have a much higher revenue generation than Valley, because Valley we are as you said, Aidan, paying back, and it's a tiered price because of the prepayment. So when we get Odin 1 online, it's certainly compared to Valley, it sort of doubles the revenue, and therefore the cash flow to the business.
Thanks, Ken. Two related questions, and just as the follow up to that last point you made, you may not be able to, 100% answer the first part, but what's annual revenue going to be when all 4 wells are basically up and running? And if that's not possible to answer, maybe the second one, when should investors expect the first quarter of full revenue so they can actually make that determination for themselves?
Yeah, because we're doing this appraisal by testing each zone. We know what Valley 1's doing, and it's on a sort of decline, which is fully expected for a well of that type. Until we get Valley 2 and 3 up and running, we've got signs of what Valley 3 can do, but we've not tested all of the zones. So we're mindful not to put out quarterly production forecasts until that occurs. And so I say the first quarter that we'll see all 4 wells would be the final quarter of this calendar year, but quarter 3 will give us a good idea of the production capacity and for revenue generation for Valley, because we should be up to full steam by then. But certainly quarter 4, bearing in mind we get Odin 1 online in Q3, we'll hopefully have 4 wells producing, and that'll be the best quarter to review our both the production revenue generation from it and forecasting going forward.
Right. Again, just following up, joint venture partner obviously was in the market last week, raising a bit of funds. What's your funding position like, for both, getting the Valley 2 and 3 online and Odin, and sort of, how much are they going to cost, and what sort of contingency have you built in if there's further delays?
Yeah, we see on the 5 million debt facility was only secured back in March, so we're in a slightly different position from our joint venture partner, where we waited until we got the gas flow going to be debt funded, and we are, I think I said earlier, we're fully funded for both the Valley 2 and Valley 3 operations and the Odin short and long term project. So we've got all that covered within the 5 million debt facility. So and as I said, we got a very good cost of capital, the debt. So we're certainly not going to be putting our hand out to raise funds to our shareholders and for quite a while.
Thanks, Ken. What's your policy or the company view on once all this cash flow is generating dividends versus reinvestment? You did mention there's obviously a lot more opportunities now for you as a production company with a proven track record. So how are you going to balance up, returns to shareholders versus putting more money in the ground?
Yeah, we obviously want to see an improvement in the current share price and capital growth there, and that, I think, will come with the realization of the revenue generation that we'll have in the next number of months. We think the opportunity to build the gas production through the production of the Valley Odin hub. So there's a lot of uncontracted gas. So what we'll do in the short term is, obviously, we've got to pay back both our AGL debt and our debt to our two major shareholders. We've got that covered, and then the remainder of the revenue generated is to reinvest that into getting the uncontracted gas through maximizing production, so drilling further appraisal wells and increasing that production and hence revenue. The gas price is really good. We expect it to be good into the future, as per that graph that I showed during the presentation, but we want to make the most of getting our production up, making that revenue, and reinvesting it, not just in the Valley Odin hub, but other opportunities where the doors are opening, because we have revenue now, and companies are recognizing that we're an emerging player in the onshore Australian basins.
Detailed question here online, which is a good pickup. Why do you require a long-term pipe from Odin to Valley?
Well, the key reason is that Valley is where all of the separation equipment, where we'll ultimately put a gas compressor. So a lot of the facilities are there at Valley. So pulling a pipeline back there certainly makes sense from a technical point of view. But we're looking at all of the options so we're reviewing the possibilities of what could happen and where the best bang for a buck for the long-term development of Odin is going to be. And it sort of depends on the density of the wells in each area. But we're, at the moment, the long-term project is what we've agreed to, and we'll continue to look at ways to cost-effectively develop both the Valley and Odin gas production going into the future.
Thanks, Ken. If there's any further questions, do pop them up on the Q&A chat. Just conscious of time, trying to wrap it up in 30 minutes. So in the last 2 minutes we have, Ken, there has been a number of questions online about your point at the beginning. There is a question before I get into that, which is definitely worth asking, but we'll take 60 seconds at the end for mine. The exploration targets beyond Odin and Valley, Ken, what sort of level of maturity are they at in terms of identification, and when should we expect some news flow on time frames for them?
So we have a lot of leads in the around the I'm not sure if it's on one of the graphs here, but you can see on the dark, so there's a lot of oil prospect leads and gas prospect leads. I mentioned Kinta. So I'd say Kinta's the most advanced, but we have 3D seismic about 40% up just to the south of Kinta. We inherited or purchased 3D seismic because Santos had shot it a few years ago. But we need the 3D seismic in the north of the block over the Kinta field, so we can pick the top of the structure. Kinta did discover gas. It wasn't hydraulically stimulated. We believe that was a discovery, but we see an opportunity potentially within the joint venture to drill an oil and gas well, but we need the 3D seismic to do that. The timing of the seismic is obviously dependent on equipment availability. At the moment, it may be towards the end of next year, but we're not quite sure. As a joint venture, we haven't decided all of that at the moment. So we're excited by the prospect and leads. within Valley. And as I said in the presentation, because we have the infrastructure now, the size of the structure, and they can be easily developed quickly, and much smaller discoveries can be commercialized. So we're very focused on not just gas. Obviously, we've got the infrastructure there, but oil, because the oil price is still reasonably attractive for shallow oil discoveries in the Jurassic. So ourselves and the operator Vintage are certainly got that on the radar. And once we get all our wells up and running, we want to get back into the exploration game again and develop this production hub further.
Great, Ken. Just back to my final wrap-up question. There was obviously a few comments more than questions online about the share price. Your original point when you started the presentation about the gap between your reserve and resource base and the market capitalization, which I think is clear for most to see. So what should investors now be looking out for in terms of the 2 or 3 key events through the remainder of 23 that's going to drive even greater, let's call it market recognition of the story? So
yeah, I think the Odin field, when it starts and when we start reporting production from it, and obviously I can't reveal the gas price, but when you take production and you see the revenue coming through in the quarterly reports, I think the realization of the value of the Odin field will come through. We did have some delays bringing Valley on. Odin, we've got the pipeline in. It's just the rental pieces at both ends. So we're pretty confident that field will come online in Q3, and that'll be delivered on time and on budget. So I think the market will realize that we're in that gas, that East Coast gas market. We're producing good gas and good gas rates, and we'll get the market value that we should have. We'll hopefully convert the resources into reserves in Odin, and we at the moment we've got about 24 petajoules of net resource and reserve. So it's a lot of, for a company that's sitting at the market cap that we should probably be double based on these resources and reserves. But we have to get out there, produce, get the runs on the board, and get the confidence of the market. And that's my job to do that through presentations like this, but we need to show that in our revenue line in the quarterly reports. And so that's a key milestone, getting Odin online, getting these resources converted into reserves, and also looking forward to drilling further appraisal wells that will then convert these uncontracted gas resources into revenue. It was really good to get the ACCC approval, Aidan, recently, because I think Odin was looked at as a 1.5-year contract. Now we have a number of gas customers who've knocked on our door looking to contract that gas. So I don't think we'll have any problems on converting the value in the Odin and the uncontracted gas in Valley as well. So that's reinvestment of revenue, and in the long term, providing revenue and capital growth to the shareholders that we're looking forward to.
Thank you, Ken. Now, it sounds like it's going to be a good webinar when we host it later in the year with the 4 wells on and the cash flow coming in. So it's going to be a very exciting end to 23. So look forward to getting that one in the calendar. Thanks, Ken. And thank you, everyone, for joining this morning for an update on Metgasco.
Great. Thanks, Aidan. And thanks to all the shareholders who've supported us over the years. Getting into production was a key thing for us. And now we just want to move through to the next phase, and appreciate all the shareholder support and look forward to that going forward.